welcome to Nirmal, ladies and gentlemen. I'm Hiral. We have with us Mr. Rajnish Kumar, former chairman at SBI, joining in. Welcome to the show, Rajnish, and always a pleasure to speak to you and get insights from you. Rajnish, let me first deep dive into what's happening with Ukraine and Russia and how big an impact we could see on the Indian banking system as a whole due to the same.
Indian banking system per se, the issue would be around that how do you handle India-Russia trade. Other than that, I don't see much impact because the presence of Indian banks in Russia is very limited. Very limited, rather, there is only one joint venture between State Bank of India and Canara Bank. That JV is operating and the balance sheet size is very small there. And most of the assets are just the government securities. So to that extent, Indian banking system doesn't get impacted in any big or significant manner. And I'm talking about the direct impact. The banking system in any country would be impacted. What happens at the macro level to the macroeconomic situations, and then everybody gets impacted. And the other issue is about like the payment system between India and Russia, which is being talked about, that how do we handle the trade transactions between India. So that is, of course, a very separate subject.
Right. So with all of this said and done, how are you seeing the banking system? Because in the last 2 years, Rajnish, we've seen a lot of strength that has come in. There's been a complete transformation as well that we're seeing, especially in terms of, say, asset quality. Overall, if you see in terms of the way provisioning is done, we have the bad bank, which has come in as well now. How would you actually paint the portrait?
No, as far as the book is concerned, I don't think that there would be any impact, because the trade between Russia and India, in any case, it is more around import of defense and energy, which is also energy as a percentage of total India's import is not very significant. But there are not exposures which would be sitting in the corporate loan books and which could go back. So that way, the Indian banking system's exposure to Russia is not significant in any manner. Again, I'm saying that suppose tomorrow there is an impact on the European countries, there is suppose a huge recession, demand recession, or the economic downturn, and then the larger banking system globally gets impacted and India also gets impacted. But if you're talking about like what would be Indian banks' exposure on Russian assets, so that is hardly anything.
Right. And Rajnish, overall, in the last 2 years of COVID as well, however the system has functioned right now, a lot has been done by the RBI as well. How are you viewing the banking system overall from an Indian perspective, say without any global impact? How has the trend been according to you?
No, it has been like, it is now in a much better shape. And it was a very painful process, let me put it this way, where the banks did all the cleanup, the recognition of all the bad loans, and then providing for their taking hit in their balance sheet and P&L. So almost 4 or 5 years, it was a huge struggle for the banks, and more so in the public sector banks. And but whatever action was taken, the banking system has been able to show good resilience and COVID impact. What was initially impacted, that expected that there will be a huge impact. So it has turned out to be a very manageable impact as far as COVID is concerned. And system has weathered it well, this crisis. So banking system today is in a much better shape from the balance sheet and P&L perspective, and the investment in the technology which the banks are making, and the overall the investment is being made in the technology sector. I think that is helping India in improving the overall productivity also of the economy, and banking system, of course, is playing a very critical role. So we are in a much better shape than what we were 5 years ago.
Right. So overall, if you see from the asset quality front as well, overall, the street is estimating it that the asset quality will improve by March 2023. Do you think that's something which you're looking at as well?
So improvement means like we have to watch out first for the March 22 numbers. Then also March 22 numbers would also give an idea about that what is the restructured loan book sitting in the balance sheet of the banks. Once that estimate is done, and then a certain amount of that restructured book may get converted into bad loans, and some of it will be standard asset. So it will all depend upon that what is the NPL situation of the banks as on 31st March 2002 and added to it their restructured loan. But in December numbers, if they are any pointer, the restructured loan book was not very large again. So what we have to do is that we have to take the overall view of the standard assets, bad loans, and restructured book. And there is no cause that March 23, other than the slippages which can happen from the restructured book. On the corporate side, given the performance of the corporate sector, there is no, I would say, undue concern, and the retail book is also holding on well. That is what the current trend is. And when we have already had 3 waves of COVID. Now, it's anybody's guess that what will happen in the current financial year. But if we have been able to manage the crisis in the past, and even if there is again some disruption on account of COVID, say 4th wave, if it comes, we don't know. So the system overall, I would say that it is much more resilient than what it used to be. So there should not be any major concern.
Right. And how big an impact would cost inflation or higher interest rates, or even for that matter, exchange rate volatility actually impact or pressurize the asset quality according to you?
So you have mixed a couple of questions. You're talking about the interest rate, you're talking about the inflation, and you're talking about the exchange rate. So one trend which is visible is that despite the oil prices touching 108 or $110, the Indian rupee has held well. We have not seen a sharp depreciation in the value of the currency. Inflation is very much there. So if inflation is there, then obviously interest rates are going to go up. When we have to wait for the monetary policy now on the 8th, it will have some pointers, some indicators. But the situation on the inflation front is definitely worrisome. And this time, what the RBI reports or indications are that because it is a supply side constraint and disruptions. So even if RBI doesn't want that India's economic growth, which is still in the nascent state, so to take any action which is counterproductive. So it's a dilemma, as always, that whether to support the growth or to contain inflation. But the reality cannot be ignored that the entire world today is grappling with higher inflation. And one of the main reasons were the disruption in the supply chains because of COVID. And the another factor which has now come up is because of the energy prices going up because of Russia-Ukraine war. So the macroeconomic scenario on the inflation front doesn't look as good.
Right. And overall, if you see in terms of the sector as a whole, as you mentioned, yes, the retail segment is something which is doing pretty okay. However, housing is seeing good growth. There are concerns coming in terms of where vehicle loans is concerned. So overall, how are you actually expecting the loan growth for the banking sector right now?
Well, loan growth has been good. It has been higher than the previous years. And the growth would also depend upon the demand for the corporates. Because whatever growth has so far come, it was largely coming from the retail segment.
Mm.
And corporate credit was not picking up, although in the last, I think, few months, there has been an uptick and all the banks are showing higher growth and whatever numbers a few banks have given. So again, like they've been able to maintain a good double-digit growth in the credit. So overall system, the credit growth would be just expected to be higher. And if the credit growth is higher, obviously, I think it will have a positive impact on the overall profitability of the banks.
Mm, mm. Right. And with all of this said and done, we've recently heard of the HDFC Bank merger as well. Do you think, I mean, firstly, what's your view on it? And secondly, do you think we will see further consolidation?
So one is, I think, when any NBFC grows beyond a point, then managing the liability side becomes a challenge. Even for HDFC, the borrowing from the banks, that would be a challenge, was becoming a challenge. Because all the banks were hitting some sort of a exposure limit. There's an exposure limit, that how much exposure you can take on one counterparty. So I think most of the banks would have run out of their exposure limits on HDFC. The liability side management becomes a big challenge, and then it would have had an impact on the growth. Second was, I think, the merger, of course, I think that was being discussed for quite some time. But another major factor has been that the regulatory arbitrage which the NBFCs enjoy. So for the NBFCs which have a certain scale, the regulatory arbitrage is no more available. So if you don't have any advantage on the liability side, if you don't have any regulatory arbitrage, then you could as well become a bank and at least have access to cheaper sources of deposits. So I think these two reasons would be the main reasons for this decision. And the other NBFCs, which have again gained a scale, say 50,000 crore and above, or maybe to begin with 1 lakh crore and above, they would have to seriously be thinking about like whether they convert into banks, subject to, of course, comfort of the regulators and the licensing policy of banks.
Right. So do you think that the industry could see further consolidation? Because along with HDFC and HDFC Bank, recently we heard of Axis Bank taking over the Indian consumer business of Citibank as well. So clearly, the kind of consolidation we were seeing in the PSU space, do you think a similar wave could be coming in the private sector as well?
It can be a trigger, because now if I look at the banks, then a State Bank of India and then HDFC, with this merger, they have narrowed the gap. So in private sector, what is happening? You have HDFC and rest are way behind. In public sector is place, it is the State Bank of India and rest are way behind. And if we are talking about that, the banks in India have to operate on a bigger scale, then in private sector, there is definitely a scope for consolidation. But a small consolidation, small takeover would not help. Well, it has to be something as big as HDFC and HDFC Bank. But it's an easier bet in case of HDFC Bank and HDFC, because culturally, I think there may not be much of divergence. And in any merger, apart from the balance sheet, the efficiencies of scale, but the biggest issue in any merger becomes the cultural issue and the integration of human resources. So many mergers have failed only because of this reason, that the two cultures or two people could not come together when a merger happens. So there are many, many examples where mergers have not succeeded because of this reason.
Right. And very lastly, Rajnish, we have the RBI monetary policy review on Friday as well. What's your anticipation on that front?
So it's only an anticipation,
I
but
know, absolutely.
because nobody can predict RBI. Any attempt to predict RBI in the past, that has been a failure. So people do say, somebody says no change, but the challenge before RBI, if I look at it, is that, and I mentioned it earlier also, that they would not like to do anything which puts a spanner in the revival of the growth. So we had two very bad years because of COVID. And if India's economy is recovering, so whether RBI does anything which puts a brake on that. But on the other hand, the reality that inflation, and it is hitting the common man. And so what to do? So maybe there would be a signal for higher interest. That's what my expectation is. As I said, that it is not advisable to predict what RBI.
Absolutely. I mean, RBI does get in a very tough spot in situations like this. So all of our guesses actually remain guesses as to how they want to act basis taking all the macros into consideration as well. But thank you so much, Rajnish, for joining us on the show. It's always a pleasure to speak to you and get insights from you. Thank you.
Thank you very much. Thank you.
Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.